This is a quick series on why I will never pay off my mortgage and how it might make sense for others to do the same. Check out the video description or top comment for the series playlist. Subscribe for more content like this. We focus on unconventional strategies to accelerate wealth growth. So here we're looking at some of the dividend rates for some of the top mutual companies out there that are doing whole life, and this is over the last 20 years or so. So we've really been in a historic low interest rate environment, and that's where you can see returns have kind of come down a bit. The dividend rates have come down a bit, but now we're in an increasing interest rate environment, so the dividend rates will likely start paying out higher, and you'll see some dividends likely go up over the next few years. But they've been getting hit by virtue of the fact that the interest rates have been low for a very long time. But even still, we can see that Penn Mutual has been extremely strong, and this is the dividend history after the last 20 years. But whole life goes back 150 years. I don't know exactly how old Penn Mutual is itself, but it's over 100 years as a company. And a lot of these carriers that you're seeing on this page are in the same boat. They have been around for over 100 years. There's a lot of history. A lot of people used whole life to keep themselves afloat in the Great Depression. Walt Disney, I believe, used whole life to fund the initial build out of the Disneyland or Disney World, one of them. And a number of businesses have been launched using the cash value from a life insurance policy. So this is a reliable return that you can have, and that's why when you use something like a line of credit with your insurance, it's a pretty secure way to have a line of credit. We took a look at my policy and the internal rate of return calculations, but one thing it wasn't actually factoring in is my actual net cash surrender value. So I actually have a little bit more cash value in this policy than was showing on the in-force illustration. So here's my cash value on my in-force illustration in year 2, age 37, which I'm not quite 37 yet, but this is my cash value showing here in the illustration. And if we look at my cash value in terms of net cash surrender value, I'm looking at $103,150 that if I was to just stop paying, that's the amount that I would get back. And so this is doing a little bit better than even in the illustration shows. So I put in, again, $120,000. That's still not great in the early years, but when we compare this to something else, so if I'm using this to build my real estate portfolio as a line of credit, then that's really where the power lies. And yes, over time, I will get about a 5% return in this policy, but I'm also using this elsewhere to build wealth. And here we're taking a look at the available amount to use as a loan or a line of credit. And I could take a loan against this policy for $95,000, $560, so almost $96,000. And the current loan interest rate is 5.7. That is variable, but we're going to also talk about the concept of an insurance-backed line of credit that gives you some extra benefits, especially when doing this with a real estate investment portfolio, because it's a gray area as to whether or not you can write off the loan interest that you pay to the insurance company. But if you get a third-party line of credit that's at a good rate because it's through a bank and it's extremely secure cash value, they're putting a lien against your death benefit when you get that line of credit. So you can get really great rates, but also you're paying that interest to a bank. Now when you're investing in real estate, that interest becomes deductible for that real estate investment business. I don't come from wealth. I spent almost 9 years as enlisted Army infantry. I have no college degree. I've been investing pretty much my entire adult life, and there are things I wish I knew about years ago. Too many finance channels and forums focus on the same tired things, and I'm not saying you shouldn't do them, but I am here to show you some more tools to succeed. Drop a like if you found this video helpful, comment if you think I'm crazy, subscribe if you want to grow with me.